Hi everyone! Today, our group will present about the financial analysis of ABC Property Holdings Berhad. Then, we will give advice on the potential of the company.
Firstly, I will briefly explain the background of ABC Property Holding Berhad. ABC Property Holding Berhad is a company involved in the property development industry in Malaysia. The company mainly focuses on developing residential and commercial property, such as house, condominiums, and short lot. In Malaysia, the property industry requires a large amount of capital and is very sensitive to external factors. For example, change in interest rates, economic conditions, and government housing policies can directly affect property demands and project costs. Because of this, property developers need to plan carefully and manage their finance well in order to stay stable. Therefore, financial ratios analysis is very important, and it helps us to understand how well the company is performing in terms of liquidity, profitability, efficiency, and solvency.
Now, we will move on to methodology. Firstly, we will create statement of income and statement of position of the company based on 5 years of company audited annual report from 2020 to 2024. We got this report from Bursa Malaysia and company website of ABC Holding Berhad. After collecting the data, we will calculate the profitability, solvency, efficiency, and capital structure ratio of the company. Lastly, based on the result, we will give advice of the potential of the company. Then, this is the result. This is financial statement overview, including statement of income and statement of position. The type of statement we use is statement of financial position, statement of profit or loss, and statement of cash flows. All of these statement and data we got it from Bursa Malaysia and company website of ABC Holding Berhad.
The financing ratio analysis of ABC Property Holding Berhad focus on four main areas which is profitability, solvency, efficiency, and capital structure ratio. First, I will discuss profitability starting with the gross profit margin. In 2024, the company recorded a gross profit margin of 52.28%. However, the trend is not stable. The margin decreased from 39.80% in 2020 to 26.22% in 2021. Then it increases to 44.79% in 2022, before falling in 2023. Differentiation may be caused by changes itself very well and cost management over the years. The return on capital employed in 2024, ROCE of the company is 1.49%. It is a low level and indicates the company in which efficiency is generating profit from investor capital. Although ROCE of the company have improved from 1.50% in 2020 to 2.70% in 2021, it declined again in following years. Overall, the company need to improve how it utilizes its capital to enhance profitability. The solvency and liquidity position starting with the QE ratio. The QE ratio remains strong and stable during the period, stay above 3.0 every year. This shows that the company have enough QE assets to cover its short-term liability. Lastly, the QE ratio also shows a stable trend. Although it decreases to 0.99 in 2021, it recovered to 1.36 in 2024. This indicates the company generally have enough liquid assets to meet short-term liability without selling inventory. In conclusion, ABC Property has strong liquidity and solvency, but its profitability and capital efficiency need improvement. Better cost control and more efficiency use of capital will help strengthen the company's overall financial performance.
Now I will talk about the company's efficiency ratio. First, let's look at the assets turnover ratio, which shows how well the company uses its assets to generate sales. From 2020 to 2021, the ratio dropped from 0.089 to 0.082. This means the company was not using its assets efficiently and sales performance was weak. However, the situation improved in 2022 when the ratio increased to 0.120 and it went up further to 0.15 in 2023. This shows that the company became more efficient in using its assets to generate revenue. In 2024, the ratio slightly decreased to 0.127, but it was still better than the earlier years. Overall, this shows that the company's asset management and sales efficiency improve over time. Next, let's look at inventory days, which tell us how long the company takes to sell their inventory. The inventory days are very high and change a lot over the years. In 2020, inventory days were 1,611 days, and they increased to 1,682 days in 2021, meaning inventory was moving very slowly. The situation improved in 2022, and in 2023, inventory days dropped sharply to 852 days, showing much better inventory management. However, in 2024, inventory days increased again to 1,453 days. Overall, this suggests that the company has problems with inventory management, which may affect cost flow and increase holding costs. Now, I will talk about the company's capital structure ratio, which looks at debt and financial risks. Now, let's look at the gearing ratio, which shows about how much debt the company uses. It started at 15.02% in 2020 and increased slightly to 15.67% in 2021. It drops to its lowest point of 14.09% in 2022. After that, the ratio raised a little to 15.58% in 2023 and fall again to 14.54% in 2024. Overall, the changes are small. This shows the company has stable and well-controlled debt management, and its capital structure is relatively stable. Finally, let's look at interest cover, which measures the company's ability to pay interest. In 2020 to 2021, interest cover was very strong at 7.88 and 13.60, meaning the company could easily pay its interest. However, in 2022, the ratio dropped sharply to 3.15, possibly due to higher borrowing costs and lower profits. Although it increased slightly to 3.75 in 2023, it fell again to 2.16 in 2024. This shows that the company's ability to cover interest has weak, and financial risks may increase with profits fell in the future. In conclusion, the company has improved its asset efficiency, but inventory management remains a challenge. Debt levels are stable, but the interest cover ratio is getting weaker, which increases financial risks.
Here is some advice on the potential of the company. Firstly, ABC Property Holding Berhad should improve its profitability by controlling costs. Although the company have a strong gross profit margins, the net profit margins have declined in recent years. This suggests that operating and project-related costs are relatively high. By reviewing unnecessary expenses, the company can return more profits and reduce financial pressures. The second one is the company should carefully select residential projects with current market demands. The company low's ROCE indicated that some investment may take a long time to generate return. By focusing on residential development in growing areas, the company can improve capital efficiency and overall returns. The third one is shareholders' return should be strengthened. The company ROE has remained low and unstable, which may reduce investor confidence. The company could improve returns by increasing earnings, adding income-generating components such as rental units of small commercial space. The next one is the company should speed up project completions and sell to improve cash recoveries. The company have very high inventory days, which means a lot of cash is tied up in unsold property. Faster project turnovers will help improve the cash flow and financial flexibility. Besides, asset utilizations can be improved. Although asset turnover has increased slightly, it is still relatively low. Better use of land and completed property, such as for rentals of misuse purpose, could increase revenue without large additions cost. Lastly, the company should maintain prudent debt and financial risk management. While the company liquidity is stable, low ROE and ROCE means that excessive borrowing could increase risks. Maintaining a moderate debt level will help the company remain financially stable during market fluctuations. In conclusion, by controlling costs, choosing the right projects, improving return, accelerating sales, utilizing assets efficiently, and managing debt carefully, the company can achieve more sustainable and long-term growth. ABC Property Holding Berhad is a diversified property developer that focuses on practical homes and mixed-use projects. The company has strong liquidities and carry lower debt compared to other competitors, which reduce financial risk. Profitabilities and return, measured by ROE and ROCE, are relatively low, so there is room to improve cost controls and capital efficiency. Overall, the company more suited for stable, controlled growth rather than aggressive expansions. Its long-term potential depends on careful project selections and operation improvements, which can gradually enhance returns over time.
Thanks for watching. This is the end of our video.